G7 countries agree to cap the price of Russian oil. The West's biggest economies on Friday agreed to impose a price cap on Russian oil in an attempt to reduce Moscow's ability to fund its war in Ukraine without further stoking global inflation. Finance ministers from the G7 group of countries, the United States, Japan, Canada, Germany, France, Italy, and the United Kingdom, said they would ban the provision of services which enable maritime transportation of Russian-origin crude oil and petroleum products globally above the price cap. That could block insurance coverage or finance for oil shipments. The maximum price would be set by a broad coalition of countries, they said in a joint statement. It would take effect alongside the European Union's next batch of sanctions, which include a ban on seaborne imports of Russian oil starting in December. Russia had already threatened to retaliate by banning oil exports to countries that implement a price cap. We will simply not supply oil and petroleum products to such companies or states that impose restrictions, as we will not work non-competitively, Deputy Prime Minister Alexander Novak told reporters Thursday, according to state news agency TASS. The Biden administration has been pushing for governments to introduce a price cap for months. The West has already sanctioned many Russian energy exports, but Moscow has continued to earn billions of dollars a month by diverting oil to China and Asia. The price cap is specifically designed to reduce Russian revenues and Russia's ability to fund its war of aggression whilst limiting the impact of Russia's war on global energy prices, particularly for low- and middle-income countries, the G7 finance ministers said. But the measure still needs work and will be extremely complex to manage. How, when and by how much the price of Russian oil could be capped remains to be seen. It would also need wider international support to be effective. We urge all countries that still seek to import Russian oil and petroleum products to commit to doing so only at prices at or below the price cap, the finance ministers said. Since the beginning of July, oil prices have fallen roughly 18% in anticipation that the recession will reduce demand, but they're still about 20% higher than they were 1 year ago. While we've seen energy prices ease in the United States, energy costs remain a concern for Americans and continue to be elevated globally, U.S. Treasury Secretary Janet Yellen said in a statement. This price cap is one of the most powerful tools we have to fight inflation and protect workers and businesses in the United States and globally from future price spikes caused by global disruptions.